Hey everyone, it is Julie here with TipRanks, and today we're taking a look at recent buy ratings from a top 1% analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope you had a great long weekend. Today, we're taking a look at recent buy ratings from an analyst who is currently ranked number 3 out of 8,700 Wall Street analysts. So we're going to take a look at these companies and what this top analyst plus others are predicting for the stock's future. Under the top experts page, today we're taking a look at Rick Schafer from Oppenheimer. Currently ranked number 3, he has a success rate of 74% in the past year and an average return of 23%. And we can see he's recently reiterated some buy ratings. The first stock that we're taking a look at has been getting a ton of attention lately. That is Nvidia. Trading under the ticker NVDA, it is currently priced at $687 per share. It has seen staggering growth this past year, up 232%, but today it is down over 5% ahead of their Q4 earnings report. That fourth quarter earnings report is due out tomorrow on the 21st, and there are expectations for some big numbers. It is expected that Nvidia will report revenue of over $20 billion, and this is compared to just over $6 billion a year ago. So that would imply revenue growth of over threefold in the past year. Analysts are anticipating big growth on the earnings per share side as well, anticipating earnings of $4.59 compared to last year's 88 cents, so more than 400% increase. This follows their third quarter back in November, where they did have an earnings beat at $4.02. The Nvidia stock has been getting a ton of attention from Wall Street, with several analysts reiterating price targets and increasing them ahead of this Q4 report. One that just increased their price target today is five-star analyst Hans Mosesmann from Rosenblatt Securities. He said that we see Nvidia beating and raising for the January quarter print, and that they note investors fretting over Nvidia's valuation should consider that, at least in their view, there is no company that has the AI-related IP at scale than Nvidia. This is true because the company's multi-decade vision and investment that cannot be replicated by throwing billions of dollars in new chip or manufacturing development. Nvidia is our top secular pick. Their price target of $1,100 would imply upside potential of over 60%. Also increasing their price target was our top analyst, Rick Schafer. He bumped up his price target to $850, saying that investors will be keen for an update on their sales into China, given restrictions on exports of advanced chips. He said that we see several structural tailwinds driving sustained outsized top-line growth, including generative AI, DC AI accelerators, and autonomous vehicles. We believe these factors justify their valuation. Overall, the Nvidia stock is rated a strong buy with 40 current analyst ratings, breaking down to 37 buys and just 3 holds. And the average price target comes in at $746, which would be an upside of nearly 9%. You'll see much higher price targets more recently, though, as these analysts have reiterated in the past week, including a street high price target from Loop Capital at $1,200, which would be an upside of 74%. As we go a bit further back, we do have a couple with downsides here, as the stock has already surpassed those price targets, and some holds as we get back into November. The second tech stock that our top analyst Rick has recently reiterated a buy rating on is VECO. They trade under the ticker VECO and are currently priced at $33.49 per share. Their stock has seen growth of 58% in the past year and has climbed up 16% in the last 3 months. VECO just shared their fourth quarter earnings report last week on the 14th, where they did report an earnings beat. For their fourth quarter, they reported earnings per share of 51 cents, beating analysts' expectations by 9 cents per share, and revenue came in at $173.9 million, which also beat estimates and grew over 13% year over year. For the full year, revenue came in at $666.4 million. The company said that 2023 was a critical year for VECO, highlighted by our semiconductor business outperforming WFE growth for the third consecutive year. They said that they achieved a significant milestone by shipping evaluation systems for 2 important core technologies, and that these will enable their customers to fabricate devices that enable higher performance and reduced power consumption. Several analysts reiterated their buy ratings following this report, including a 5-star analyst, Mark Miller from Benchmark. He noted that Veeco's semiconductor sales are flourishing, bolstered by the adoption of new laser spike annealing applications and a strategic increase in market share. The company's recent delivery of evaluation tools to top-tier logic and memory customers, coupled with the anticipation of high-volume manufacturing orders, underscores a strong growth trajectory. And our top 1% analyst, Rick Schafer, also increased his price target. Now up to $40 per share. They did note that Veeco delivered solid results in their Q4 and topped positively pre-announced results by 2% and 20%, with upside being led by semiconductors. With just 6 current analyst ratings, the Veeco stock does come in as a moderate buy with 4 buy ratings and 2 holds. And the average price target comes in right at $40 per share for an upside potential of 19.44%. And we have a couple analysts at that $40 price target, both Mark and Rick here. On the high end, we have another analyst from Northland Securities with an upside of 31%, and a low end is our hold rating with a downside just over 1% from Barclays. And our third stock getting top analyst attention is Analog Devices. Trading under the ticker ADI, their stock is currently priced at $188 per share, and they have seen a couple more ups and downs the past year. Overall, up 3.5%, but they have climbed over 4.6% in the last 3 months. Analog Devices will also be reporting their earnings tomorrow on the 21st. Analysts are anticipating a bit of a year-over-year decrease, and this follows a slight beat in their last quarter. For their Q1, analysts are anticipating earnings per share of $1.71, and that is a decrease over last year's. In their third quarter, they reported revenue of $2.01, coming in 1 penny ahead of analysts' expectations, but did have revenue of $2.7 billion. They said that for their fourth quarter, they delivered revenue and profitability above the midpoint of their outlook, despite difficult macroeconomic environment. Several analysts have reiterated price targets this past week ahead of this earnings report, and we do have a mix of holds and buys. One hold rating does come from Gary Mobley. The Wells Fargo analysts note that the company is expected to maintain its forecast for overcoming inventory-related challenges by the middle of fiscal 2024, potentially setting the stage for a second-half recovery. But Mobley has adjusted near-term estimates to account for a potentially deeper revenue trough, suggesting some caution. Feeling a bit more optimistic is an analyst from Citi. They said that their buy rating on the stock is grounded in a multifaceted assessment of the company's financial outlook and market position. They anticipate that while the company may guide lower earnings in the short term, they're likely nearing the end of their downward earnings trend and are poised for recovery. They emphasize the company's strong execution and expect them to outperform peers in navigating the current market environment. Top 1% analyst Rick Schafer recently maintained their buy rating at $215, which would be an upside of over 13%. Overall, Analog Devices does come in as a moderate buy with 23 current ratings. With 15 buys and 8 holds, the average price target comes in at $206, which would be an upside of over 9%. Down below, we can see that hold rating from Wells Fargo with a slight downside of 2%. Rick's rating here at that upside nearly 14%, and a high-end price target from Susquehanna of over 21%. So that is a quick look at 3 tech stocks that have all picked up a recent buy rating from a top 1% analyst, and plenty of other 5-star analysts weighing in on the stocks as well. Let me know your thoughts on these 3 companies in the comments down below and which one you're most excited about. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any stock, just showing what those analysts are up to, so please always make sure you stick to your own investing plan. Thanks so much for watching. Have a great day, and I'll see you back here next time.